All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. We're going to do a little Sunday review here, just kind of look at the markets ahead. Some of the things I'm going to be really focused on, I'll be talking about that, and kind of my plan, because this week, it's the week of Christmas. We could get that Santa Claus rally, right? That could definitely happen where I saw the NASDAQ. Somebody was showing this to me earlier today when I was at church. Another trader was showing me that the NASDAQ is pretty much right there on one of the moving averages. So we could bounce a little bit off of the moving average, but who knows? Maybe this week is just complete devastation. Maybe the CPI, the inflation data that comes out this week, comes in way higher than expectations, indicating that the interest rate hikes are not working. And we're going to have to pay attention to core inflation too, excluding gas and food prices. The core is going to be the most important. But I mean, last week you had U.S. business activity shrinking for the 6 month. The U.S. global, U.S. composite fell to 44.6 in December from 46.4 in November, signaling the joint fastest decline in business activity since May of 2020. Now, that's not good, but again, it kind of makes the Fed look like they're doing their job. It makes the Fed look like there's actually something getting done. The interest rates may be working. So, my plan again this whole week before we get into this, and I'm really just reading this from Trading Economics. Anybody can find this information, but I'm just going to put it together for you guys so that you know what I'm following and we can kind of be on the same page here. Next week, though, my plan is to pretty much scalp to get, even if we get this Santa Claus rally, I'll play the upside. Don't get me wrong. I have no problem buying calls and playing the upside, but I'm not going to be sitting in these trades long enough for them to turn around and, bite me in the butt. So I will be scalping. I'll probably will be focusing on Amazon. I might trade PayPal. I'm thinking about getting into Tesla too. There was a big announcement with Tesla, but maybe there could be a little bit. Tesla's down so much, I wouldn't be surprised if it does bounce at some point in time. I've been thinking about trying to trade Tesla, but I'm real comfortable with Amazon. I'm real comfortable with PayPal. I could trade NASDAQ futures, or not. You could trade futures, but trade the options contracts on the futures. I might try a little bit of that going into the new year. We'll see how it goes. But anyways, we got a busy week. I wasn't actively trading this time last year or probably the year before that. So I thought it was going to be kind of a sleepy week. It wasn't this coming week. It's not going to be. There's a lot of stuff. There's earnings coming out as well that could affect the markets. So we have the PCE, I'm sorry, I said it was the CPI. We have the PCE price index coming out. We also have personal income spending. You have the University of Michigan's consumer sentiment and durable goods orders. Japan and Canada are releasing inflation data, especially like inflation data from Canada or the UK. I pay attention to this kind of thing because it also signals, right, if the inflation comes in hotter or higher than expectations in some of these other economic zones, then it could indicate that their interest rates hikes are not working, and it affects the American, maybe what the Fed does. So it's something to pay attention to. The interest rates, the inflation rates, the CPIs, the PCEs, paying attention to them, not just the American ones, but the other, especially the other Western countries, been very beneficial to my trading. I'm just going to put it out there like that. So U.S., the spotlight will be taken by the PCE price index. This is the personal consumption expenditures index. So this is huge, especially the core PCE. This is going to be about what are Americans spending. We know the retail numbers came in lower in November, not only for the U.S., but also for the U.K., so keep all of this in mind, when we're trading, obviously. Core PCE inflation likely rose 0.2%, right, over the previous month, which would result in an annual rate of 4.7 from 5% back, I guess, in October, right? It was 5% annual core PCE inflation rate in October. It's supposed to come down to 4.7%. So that's the number we have to pay attention to. If it's higher, if it comes in at 5, that's going to be pretty bearish, I would imagine. Unless they decide to pump it anyways, right? That could happen. You could get the bad inflation, the higher than expected inflation data, right? Which should be bearish because it means the interest rates aren't quite working yet. But you never know. The market could for some reason take it as good news. It could pump things up the last week. I think if we do get the Santa Claus rally, it will not be long lived. That's my personal opinion about it. On top of that, it would be interesting to follow a final reading for the third quarter GDP. All right. You have consumer confidence, blah, 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 blah. Elsewhere in America, Canada will publish the latest CPI and retail sales data. So I'm going to be paying attention to that because, Amazon works in Canada. And if I'm trading Amazon and their retail numbers are bad, their inflation is really high, that's going to give me more conviction to stay in my short trades on things like Amazon, PayPal. And again, the reason I'm trading these NASDAQ, I guess we can't call them growth stocks anymore. At this point, we'll call them shit stocks, right? They're almost like shit. Jeez. It's like Bitcoin, and PayPal is very sensitive to the crypto prices as well. But you got to pay attention to that. If you're going to trade those kind of stocks, the reason I trade them is because they're highly sensitive to things like inflation reports, interest rate hikes. So it's all good. You have in the UK final estimates for third quarter GDP, preliminary data for Britain's economy contracting for the first time in 1.5 years in the third quarter. So this is kind of important, right? If the UK is contracting, the UK doesn't affect us a whole lot, probably not as much as the euro does, but I mean, the Bank of England, it's still a very powerful monetary force. So you want to pay attention to what's going on in England just a little bit. The Eurozone flash consumer confidence is expected to improve for the second consecutive month. You have the German GfK consumer indicator. Some of these I won't be paying too much attention to. You got some prime rate decisions out of China. But I mean, that's the big stuff. That's really what we want to be focusing on. You have stocks falling for the second week. They ended, for a second week down. Could this third week be up, especially because it's near Christmas? Just keep that in mind. That's what I'm going to be keeping in mind. I'm open to both ways. It will not surprise me if the market completely gets demolished again, especially if we get bad PCE data and bad retail sales from Canada, all this kind of stuff. If this comes in bad again this week, I won't surprise me if the market gets demolished. But I'm keeping an open mind that even whether we get lower inflation, higher inflation, the market could pump. It could rally. They could just try to scam the put option contracts, the people short on the futures before the end of the year. And there's also tax loss harvesting too. So you got to, there's so much to it. Nobody knows exactly what's going to happen, but I'm open to both ways. And my strategy hasn't really changed. I'm going to be in and out of these trades as quickly as I can be. I'm going to be scalping every day. Another little part of my strategy too, though, for some safety is usually the contracts I'm buying they don't expire that week. They expire 2, maybe even 3 weeks out because they're real cheap right now. Maybe 6-7 months ago, contracts 3 weeks out on PayPal or Amazon, very expensive. But now they're like, a few $100s for one contract. So what I've been doing, I'm not suggesting this, but what I've been doing is buying those contracts, scalping the contracts that are 2-3 weeks out, because in case I'm like dead wrong that day, or let's say the market goes against me and I'm holding 10 contracts. Well, if they expire 3 weeks from now, the probability that the contracts will come back down, especially in this bear market, if you're in puts, right, that they'll come back in your favor, the probability is pretty high. You just need a little bit of patience. But the point is to scalp these markets. But I never want to scalp and then get out, take a loss, just to see the market go back in my favor the next day or a couple hours later. I can't stand that. So sometimes you got to be patient. But, like I said, there's different styles to this. Some people want to take on a couple contracts and hold them overnight or hold them for a couple of days, and see what happens. Other people like buying 20 contracts at a time and staying in the trade for 10 minutes. That's more my style. I do like the high risk, high reward, quick scalps. But I won't lie to you guys. It's super dangerous. I can't, give you my blueprint. I mean, even if I did, it won't work. Like, you have to develop your own process. I'm telling you, all these people that are selling Holy Grails or, I have never had it in my mind that I'm going to pay this person to tell me how to do this, or I'm going to pay this person for information that's probably already out there. So, you you got to develop your own process. And all these people that are trying to sell holy grails, you might be able to pick up some tips and stuff, don't get me wrong, but you have to do it yourself. You got to build it. Nobody else is going to build this for you. Nobody else is going to tell you, even if you follow signal chats, which you should not do. Some people do it. Some people follow signal chats, because they want to know what they should buy. It's like, it's an information game, right? You have, at least for me. Some people, they don't care about the news. They don't care about the economic data. They're trading price action and volume. But to me, when you at least review the news, the price action and volume can almost be predicted. There's more areas of probability or less probability based on what kind of economic news is coming out. So without the news, I would not be able to be successful these past 2 or 3 months. You're talking about, I literally changed my fortunes from about August to now. It's just amazing. I made almost as much in those 2 or 3 months as I did the entire year driving a forklift. I had some problems. I wasn't enjoying that gig. I left and I started going back to trading full time back in like October, the week before Halloween. Made a couple grand that week. November, killed it with the CPI reports. November is really kind of what set me up for this. But you guys got to remember, I'm up nearly 20 grand, let's say. I got about 10 grand in my account. I've made, I don't know, $5,000, $6,000, $7,000 worth of deposit. I'm up nearly 20 grand, maybe like 17 grand or something. But don't forget, I was also down on the year $3,500 on PayPal, which I got all that back in August and September. And then, when I left the job, I don't know, something just clicked. Something's really clicked. Is it just good fortune? Is it, God smiling on me? Is it just my strategy? Is it just my knowledge? Is it just my experience? I don't think so. I do think there's a divine purpose behind all of this, behind the markets. I don't think it's just all me. I'm just, bringing in these gains every week. This week I'm up over $3,000. Every day, 600, 600, 400, 600. It was a crazy week. Great scalps. Some days I wanted to make more like 1,000 and I only made 400 or 500. But, you got to take what the market's giving you. I hope this is helping people that are interested in doing this, because I've been very interested in doing this for a long time. And I feel like I'm finally there. I was there in 2021, but I made some bad decisions. Like I said, I kept going short when the market was going down. So I'm really paying attention to the economic factors here, because once the market turns around, even if it turns around just for a week, like if we get a Santa Claus rally, I want to be on the right side of those trades. I do not want to be on the wrong side of those trades. So yeah, going back to, is it just my strategy? Honestly, I think it's my experience. I really do. This is key. Besides God, right? Obviously, God rules over all, right? He's in charge of all of this. But we have to remember that. But also, my strategy, it's cool, it's working, but I think it's the experience. Because when you see the morning rally, like we have a lot recently, you see the morning rally, it is tough. You have to have nerves of steel. You have to have balls to short that rally, to short that morning rally. And you'll have reasons. We're in supply. We're getting bad economic data. The dollar's going up. There'll be good reasons to short, but you still have to have balls while the market is going up. You see the NASDAQ going up, and you decide, that's how the professionals would do it. But our instinct is when we see the market going green, we want to get in and go long because it's just instinct. Same thing on the downside. A lot of the times, if I make a second trade that day, I'll get caught. I'll try to take another trade to the downside, and then boom, the market pops up, starts shopping around, and I'm stuck in this trade for 3 hours. I got to sell for a small loss. Yeah, it sucks. It does. It sucks. I hate losing. I hate losing more than I love winning. But it's the experience, because I've been at this for 3 years, not 3 years straight, but I've been involved in the markets now for 3 years, and I've been honing in on my scalping strategy. The scalping strategy is not good for everybody. I'm not saying everybody should do it. I've been working at this, so it's like experience. When I see the market rallying, but I know we're in a bear market, it's like I have the experience now to short it. I have the balls to short it. When I'm in a trade and it's the first couple of minutes and it goes against me, you got to have the experience. Do you get out or do you add positions? And then if it goes against you a little bit more, do you add more contracts because you're confident we're going to break the opening low? These are just things that come with experience, come with intuition. It's very intuitive. There's no science to this. I'm not doing any math. Some people look at the numbers. They're like, oh, S&P 500 is under 4,000 and it's going to hit 36. I don't pay attention to anything because my brain doesn't work like that. Numbers and thinking about numbers, it's just not how my brain works. It's not a science. It's extremely artistic, and I want to inspire all of my viewers to find a trading style, develop a trading style that can be with you for the rest of your life. So all that being said, I hope you guys enjoy the rest of the week. I will make another video later on today, probably in front of the green screen, about the dollar going into 2023. I found a fantastic article from Morningstar.com, and I want to do a whole video just about the dollar because I have some thoughts. I'm holding a lot of cash. Some of you guys are holding a lot of cash. And remember to buy metals too, right? I went and treated myself. I bought, maybe, 15 ounces of silver, bought a little 10th ounce of gold, bought some chains this month. Actually, I just spent $100 on silver earrings, but they look nice. They look really, really nice. But I love silver. I love jewelry. I love gold. So stacking some of that stuff, that's going to preserve your financial, economic energy forever. I mean, just think about that, right? With gold, with silver, these are things that have been around for 5,000 years, since ancient Babylon, and probably before that. All these ancient civilizations. Gold and silver is God's money, and it's been around forever. It's going to be around forever. So having some of it, you're preserving your financial and economic energy, in a unit. You're storing that forever, and it'll never go to zero, right? Even though I'm down on my stack isn't down 70%. I think silver's down 9% or something year to date, or maybe the last couple of months. But anyways, it's not down 70%. So enjoy the rest of your week, guys. I'm going to get out of here. I'll see you on the next video.